You file your taxes every April and feel something strange. Relief. Why relief? You just handed over 30% of everything you made. This is the IRS withholding trick that costs Americans billions annually. You worked overtime, side hustles, weekends, and the moment that tax refund hits your account, you feel like you won. That reaction is the psychological manipulation. Because here's what actually happened. The IRS held your money all year through payroll withholding, paid you zero interest, and returned a portion of what was already yours. And you felt grateful. This is how the tax system uses behavioral psychology against you. And once you see the mechanism behind it, you can legally reduce your taxes and reposition yourself completely. Most people never see this because they're too busy feeling either fear or relief, both emotions the system deliberately manufactures. But there's a third option nobody talks about: strategic tax planning. And that's what I'm going to show you how to pay less taxes legally. The real IRS trick is automatic tax withholding. Every paycheck, money vanishes before you touch it through W-4 withholding. You never held it, never controlled it. It just disappeared into a system that returns fragments a year later as your tax refund. Here's what tax overwithholding costs you in real terms. The average American tax refund is $3,000. That's $250 a month you didn't have access to. If you invested that $250 monthly at a conservative 8% return, you'd have $3,060 instead of $3,000. Seems small, right? Now compound that over 10 years. You'd have $45,736 instead of $30,000 in refunds. The difference is $15,736 you gifted to the IRS that paid you zero interest while you carried credit card debt at 18 to 22% APR. So here's how to adjust your W-4 to keep more money. Stop giving interest-free loans to the government. Go to your HR department or payroll system tomorrow and adjust your W-4 withholding allowances. Most people claim 0 or 1 allowance. That's maximum withholding. The system trained you to do this because tax refunds feel like free money. Instead, calculate your actual tax liability using the IRS withholding calculator. It's free. Then, adjust your W-4 form to get as close to zero refund as possible. Keep that $250 monthly. Invest it, pay down high-interest debt, build cash reserves. Control beats refunds every single time. This is how to stop overwithholding on your paycheck. But W-4 optimization is just the entry level. The deeper tax reduction strategy is income classification. See, the tax code doesn't tax all income equally. It taxes different types of income at different rates. W-2 wage income tax rates, taxed at your full marginal rate up to 37%. Long-term capital gains tax rates, taxed at 0%, 15%, or 20% depending on your bracket. Qualified dividends tax treatment, same preferential rates. Real estate depreciation tax benefits can offset active income entirely. The IRS isn't hiding these tax loopholes. It's counting on you not knowing they exist. Here's the tax optimization framework. Your goal is to shift income from earned wages to passive income or portfolio income. This is how to legally pay less taxes, not tax evasion. Practical tax reduction example for W-2 employees. You make $80,000 salary, all taxed as ordinary income tax rates. Effective rate around 18 to 22% depending on your state. But if you negotiate with your employer to take $65,000 salary plus $15,000 in employee stock options that vest over time, that $15,000 gets taxed as capital gains when you sell, potentially at 15% instead of 24%. Same total comp. Different tax classification. That's $1,350 back in your pocket annually, just from understanding tax brackets and classifications. Or start a side business for tax deductions, even a simple one. That business can deduct home office expenses, equipment, education, business travel. A W-2 employee making $70,000 cannot deduct their laptop. A sole proprietor making $70,000 can deduct the same laptop, their internet, 20% of their rent as home office deduction, their phone bill. Same person, different structure, $4,000 to $7,000 in additional tax write-offs. The tax code rewards small business owners because business owners create economic activity. Position yourself accordingly. Here's where advanced tax strategies get interesting. At a certain income threshold, your tax optimization should shift from deductions to business entity structure. Most people never make this leap because they think business entities like LLCs and S-Corp are complicated or for rich people. That's the psychological barrier keeping you locked in high tax brackets. The threshold is roughly $60,000 to $80,000 in side income or freelance revenue. Below that, a sole proprietorship tax structure works fine. Above that, you're leaving serious money on the table. Here's why. Sole proprietors pay both income tax and 15.3% self-employment tax, that's for Social Security and Medicare, on top of your income tax rate. That's brutal. But an S-corporation tax structure changes the equation. You pay yourself a reasonable salary through W-2, pay employment taxes on that, then take the rest as S-corp distributions, which avoid the 15.3% self-employment tax. Real S-corp tax savings example. You make $100,000 freelancing. As a sole proprietor, you pay $15,300 in self-employment tax. As an S-corp, you pay yourself $60,000 salary and take $40,000 as distributions. You now pay $9,180 in employment taxes instead of $15,300. That's $6,120 saved annually just from S-corp election. Same income, different classification. The S-corporation setup cost is $1,000 to $2,000, depending on your state, pays for itself in 2 to 3 months. But most people never do this because they're operating from the taxpayer identity, not the tax strategist identity. Now here's what wealthy people understand about taxes that nobody talks about. The game isn't tax elimination. It's tax deferral and strategic timing. When you defer taxes, you keep capital working for you instead of sending it to the IRS. That capital compounds. Years later, you pay the tax from a larger pool, and if you've positioned correctly, at a lower tax rate. This is why retirement account tax benefits are powerful, despite being basic advice. A $6,500 IRA contribution at 24% tax bracket saves you $1,560 in taxes today. That $6,500 compounds tax-free for 30 years at 9% becomes $86,000. You pay tax when you withdraw, but if you've structured retirement income correctly, you're pulling from multiple sources, staying in lower brackets, maybe even 12 to 15%. You deferred at 24%, paid at 15%. The tax arbitrage is the wealth-building strategy. Scale this up. Real estate depreciation deduction lets you show paper losses while property appreciates. You defer taxes for decades, then execute a 1031 exchange, defer again. Do this correctly, and you never pay capital gains tax, ever. It passes to your heirs with a stepped-up basis. That's not a loophole. That's Section 1031 of the tax code, written in plain English, available to anyone who structures their real estate investments correctly. The IRS uses behavioral psychology because force is expensive. Automatic withholding is psychological manipulation. Refunds create gratitude. Fear prevents questioning. But here's what changes everything. The moment you stop seeing yourself as a taxpayer and start seeing yourself as a tax strategist, your decisions shift completely. You don't ask, how much do I owe in taxes? You ask, how is this income classified? You don't fear IRS audits. You maintain clean records and understand tax compliance. You don't avoid taxes. You defer them strategically and position income optimally. 3 tax moves you can make this week. 1. Adjust your W-4 to stop over-withholding taxes. 2. If you have any side income, track every business expense for tax deductions starting now. 3. Calculate your actual effective tax rate, not your bracket, because knowing what you actually pay in taxes shows you where leverage exists. The tax system isn't going to explain these strategies to you. Your HR department won't. Most accountants just file what you give them. But now you know how the tax game works. And knowing how wealthy people legally reduce taxes means you can reposition yourself completely. That's the difference between reacting to tax season and orchestrating it. Subscribe for more financial insights.